Welcome to your most up-to-date Washington, D.C. housing market breakdown, where we deep dive into prices, sales, inventory, interest rates, and what it means for buyers and sellers in 2026. Is Washington, D.C. finally cooling off? Or is the market shifting in a way that savvy buyers and sellers can only dream about? Let's jump right in. Across the district, the average home value is sitting around $572,000, according to Zillow's latest index, about 3.2% lower than a year ago, showing a slight price retracement after years of rapid gains. At the same time, Redfin reports median sale prices still around $713,000, which is up year over year, a signal that pricing dynamics vary significantly by home type and neighborhood. When we look at homes sold, the picture becomes even more interesting. Redfin's December 2025 summary shows 492 homes sold in DC, which was down about 15.6% compared to last year. We don't yet have complete February 2026 figures from MLS vendors, but past February 2025, data showed that new pending sales and closed sales were slower than the year before, a trend likely continuing into early 2026. Let's talk median prices. Zillow's market snapshot shows typical homes recently sold around $659,000 median sale price, even as average value drops. Meanwhile, inventory, the number of homes available for sale, is expanding more than we've seen in years. A slow pace of sales with more homes hitting the market means buyers are gaining some leverage, helping stabilize the market. Interest rates remain a central story. National forecasts, including from Realtor.com, expect mortgage rates to average around 6.3% through 2026, a modest improvement from earlier highs, but still well above the 4% range seen in past years. While those rates are higher than historic lows, they've eased enough to coax some buyers back into the market. And that's one reason Zillow economists expect existing home sales to rise modestly next year. What's next for 2026? Forecasts from national experts suggest home prices will continue to rise, but at a slower pace, roughly 1% or so, rather than the double-digit jumps we saw during the pandemic. Some regional forecast models think DC might even see a slight price correction, about a 1% drop, due primarily to economic uncertainty tied to the federal workforce and local job market dynamics. Meanwhile, national forecasters like Realtor.com anticipate that supply will continue to grow and buyers' negotiating power will strengthen as inventory comes back closer to historically balanced levels. Let's zoom in. Properties in high-demand neighborhoods, like Georgetown, Capitol Hill, and Ward 3 communities, still command strong prices even as broader citywide trends moderate. Luxury and premium assets have continued to attract high-net-worth buyers, sometimes bucking broader stagnation. Affordability remains a challenge, both for buyers and renters. Realtor.com reports rising rent prices across the DC area, pushing more renters to consider purchasing. But higher prices and borrowing costs still squeeze many households. For buyers, consider targeting neighborhoods showing the best inventory growth. More choice means better negotiations. Monitor mortgage rates closely, because even a quarter-point move can affect your buying power. For sellers, pricing strategy is everything in a market where median prices may soften. Competitive pricing, staging, and a targeted marketing plan could mean the difference between a fast sale and a stale listing. Thanks for watching our Washington, D.C. housing market update. Drop a comment with your questions, and we'll cover them in our next edition.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.